Hello, good evening, everyone. Thanks for joining in this webinar to discuss the next asset on the platform, Vivriti Senior Secured Bond. Right. So first, I'll talk about the platform for 2 minutes, and then Anshul will discuss the asset in details. Right, with what are the selling features, risk involved, structure, etc. Then will also discuss how to invest, some general FAQs. Right. Then we have Parth joining in from Vivriti Capital, where we will have some question and answer with him. And post that, we'll cover all the questions that are coming from audience. So we have got some question on the Luma thread, webinar, invite. But if you have any questions, you can punch in here and we'll cover them. Either I or Anshul or our team will answer them here, right? So let us start, right? So for people who are joining this for the first time, right, this is our core investment policy. Basically, we bring out assets that are secured in nature. So they are backed by some loan receivables, either gold loans, business loans, equipment loans, or wholesale loans. Right? These assets provide you fixed return with no correlation with the market, as in the equity market, right? And third is these are issued by quality NBFCs and HFCs. NBFCs are non-banking financial companies, and HFCs are housing finance companies, right? So what do we mean by low quality NBFC? Is basically these operate at a low leverage. Low leverage, that means they have very high equity in the business, right? They have external equity investors, really good set of investors, and they have really good corporate governance practices, and the promoter also has a very good history, right? So this is the basic core investment policy. Obviously, there is a lot of due diligence that goes on top of it while bringing any bond to the on the Wintwell platform, right? So this is one platform for your debt investment. So we have started with bonds, and we only do senior secured bonds. We also do sovereign gold bonds, and you can check them out. Through these webinars, our education team calls, we keep educating investors about structures, risk, asset, right? And we believe in like 100% transparency and 0% selling. So our job is to educate investors and then let them take a call whether it makes sense to invest in this asset or not, right? Smooth investment flow. You can, once you invest, you'll see all the investments in your dashboard. You'll get a consolidated view, right? And most of these assets are exclusive on Wintwell platform, and you get access to them first on Wintwell, right? So till now, we have raised money for bonds worth 750 crore plus. 42,000 investors have invested. Of that 750 crore, 320 crore has been repaid. There has been zero default, zero delays, right? And we are really thankful for the trust and support that is shown to us, right? Okay, go to the next slide. Yes. So why senior secured bond? Is there different type of bonds, right? What we only do senior secured bonds. So in senior secured bond, there is some kind of collateral, right? And we have control over the collateral. We define what kind of collateral that is, right? It can be either loan receivables like gold loans, personal loans. In NBFCs, in case of NBFC, generally a different kind of loans that NBFC has given. And in case of if the NBFC is not able to pay, if it defaults, then this collateral can be used to recover the money. And investors, these are senior secured bonds. So investors have first and exclusive right over this collateral. Can you go to the next slide? Yeah. So there are different kind of instrument. Basically, there is equity, which is highest risk, highest reward, right? Then there is hybrid debt, AT1 bonds, sub debt, etc. Then there is subordinate debt, which is sub debt. Then there is senior unsecured bond, and then there is senior secured bond. So we believe you can mitigate risk well in senior secured bond. If you go for any high return product, risk will come with it, right? So, and in a good product, the risk is mitigated well, it is managed well. Among the fixed income instruments, bonds, different bonds, we believe senior secured bond is a kind of instrument where you can mitigate or manage the risk well. So we only bring senior secured bonds. We haven't brought any unsecured bond till date. Can you go to the next slide? Yes. So this is a comparison of bonds, senior secured bond, senior unsecured bond, and subordinate bonds, right? Only senior secured bonds are backed by collateral. Senior unsecured and subordinated bonds are not backed by collateral. Compared risk, senior secured bond is a medium risk compared to other bond, right? Senior unsecured is high risk, subordinated bond is even higher risk, right? And the returns will also collaborate the same. right? In case of bankruptcy, the first priority is always given to senior secured bond. Then if there is anything left, then to senior unsecured bond. And if there is anything, then subordinated bonds, right? So this is the comparison between bonds. And on Wintwealth platform, you'll only find senior secured bonds, right? Can we go to the next slide? Yes. So Anshul will now speak about Vivriti Capital. Over to you, Anshul.
Thanks everyone for coming to the webinar. Like Ajinkya mentioned, next week our new asset is going live on the platform. It's a senior secured bond, the issuer company. It's a new entity on the platform. The name of the entity is Vivriti Capital. It was promoted by Mr. Vineet and Mr. Gaurav way back in 2017. So the entity has been in existence for almost 5 to 6 years. Entity has primarily 3 main asset classes where it works in. One is wholesale lending to other institutions. Institutions can be other small and medium NBFCs, can be non-NBFCs, enterprises, etc. Second entity is present in direct retail lending. Bulk of the retail lending happens by partnering with other institutions. These institutions in turn can be other NBFCs. And third main vertical is supply chain finance, wherein vendors and dealers of large corporates, for their working capital requirements, entity provides them supply chain financing. Entity also has a subsidiary called as Vivriti Asset Management, which manages multiple AIFs. It has in fact launched 7 AIFs till date and is growing substantially year on year. A brief snapshot about the financial health of the entity. Entity has an equity base of slightly more than 1,500 crores. The portfolio size is almost 5,000 crores. Entity is backed by very marquee equity investors like Creation Investment, Light Rock, TVS Capital, Capital Growth Fund, etc. And the liability profile of the entity is also very diversified. We have Parth on the webinar with us, and we'll be discussing how he is managing the liabilities of the entity, how the entity is doing in more detail with him. But amongst the lenders or the debt investors of the entity, it's a mix of banks, large NBFCs, mutual funds, DFIs like SIDBI and so on. Entity's leverage is fairly moderate. It was at 3x as on December. And NPA numbers have been also reasonable. We'll see these numbers, how they have moved year on year in the next slide. So these are some of the broad parameters of the entity. Entity's net worth, like you can see over the past couple of years, has become almost 2 times. The portfolio has been growing rapidly. The entity's portfolio was around 1,000 crores in March, and entity will be finishing at somewhere around 5,000 crore plus by the end of this financial year. Entity has been profitable. Like you can see, even during COVID, entity was profitable. They did not see too much stress even on the portfolio. The NPA numbers, the gross NPA numbers were below 1 time only. Entity's debt to equity ratio has also been low to moderate, like we have discussed in previous webinars. Regulations allow entities to operate at a leverage of 6 to 6.5 times. At Wintwealth, we like entities where the leverage is on the lower side, because for debt investors, the margin of safety is there. The risk is lower. So compared to what the regulations allow, the leverage of Vivriti Capital is pretty moderate. And net NPA numbers, again, have been on the lower side. This is a brief profile of senior management. Entity was promoted by Mr. Vineet, who has roughly 2 decades of experience in financial industry. Entity's CFO is Srini, and Parth, who heads the treasury, who's also on the webinar with us, is another key management personnel at Vivriti Capital. In terms of financial governance, like any NCD, there are stringent covenants for the present asset as well. These covenants cover parameters like portfolio quality, capital adequacy ratio, leverage, profitability, etc. The detailed covenants can be seen in the information memorandum, which is there on the asset page on the website. But these are some of the key covenants which we have highlighted here. So the asset quality should not go down substantially. The total leverage that entity can take has been capped. Entity needs to remain profitable on a quarter-on-quarter basis. These are some of the key covenants which are there. Now coming to the comfort points and concern points. Firstly, going through the comfort points, entity has been growing consistently since the inception, since past 5-6 years. The AUM has seen a significant consistent growth over the past few years. Having said that, entity's capitalization has been low to moderate. Like we saw in our earlier slide, entity's leverage hasn't crossed even 3.5 times over past 3 years. And entity's promoter and management team comes with significant experience from the financial sector. Coming to concerns, like no entity is perfect, there will be some concern points. Speaking particularly about Vivriti, even though entity has seen a significant scale up, but the vintage is still slightly limited. Like we discussed, entity began operations in 2017. So we have performance of only 5 to 6 years to monitor how Vivriti will scale up in future. Secondly, like we discussed, entity is present in 3 sectors. The main sector consists of wholesale lending, wherein entity gives out term loans to other institutions, and those loans are slightly chunky. So that can be one of the concerning points. Having said that, the entity's portfolio quality has been good, so that also provides comfort to the investors. Coming to the broad specs of the bond, which is going live next week on the platform. It's a senior secured bond. It is rated by CARE Ratings. The rating assigned is A with a positive outlook. The amortization, the bond has quarterly amortization, which means whatever money is invested in the bond over each quarter, 1/6 of the money will be repaid back to the investor. And along with the principal repayments, the interest for that quarter will also be credited to the investor's bank account, which is linked to the demat account. The returns of the bond are 10% XARR, and bond is listed on the exchange. It's a senior secured rated and listed bond. Ajinkya, over to you.
Yes, thank you, Anshul. Yes. So any bond generally had some risk. So senior secured bonds have 3 kind of specific risk, and we'll understand those risks and how they are mitigated. Right? They're mitigated, they're managed, but that doesn't mean they're zero. They're non-zero, right? So first is a liquidity risk. That means risk of money being stuck. Second is credit risk. That means risk of money being lost. And third is fraud risk. Fraud done by especially NBFC promoters, right? So let us understand what is a liquidity risk. So like if the entity goes bankrupt, then ideally the money should be recovered in 6 months. But in India, we have seen it taking longer time sometimes, right? So your money will be stuck for that time. Also, if you want to withdraw money before maturity, you can, this is a listed bond, you can sell it on exchange. If there is no buyer, Wintwealth will help you find a buyer. We don't guarantee any liquidity, right? But we'll help you find buyer, right? And if there is a buyer, you can exit. If there is no buyer, you have to wait till maturity, you'll have to wait till there is a buyer, right? So that is another liquidity risk, right? So how do you mitigate liquidity risk is first we make sure that if we feel that there is a reasonable chance of NBFC going bankrupt, we don't onboard them, right? Second, on your level as an investor, you should diversify well, because at any point of time, if you want to exit, let's say one bond may be liquid, but if you have invested in 10 bond, 8 9 will be liquid, unless something like COVID happens where the whole liquidity is dried up, right? So you have to diversify well to mitigate liquidity risk, right? Second is credit risk, right? So credit risk is money being lost. For that, we only bring senior secured bonds. So that is first risk mitigate. Then we define collateral, right? And then on a regular basis, we monitor this entity, underlying loans, whatever is their collateral. We check that on monthly basis. We monitor the NBFC on quarterly basis, right? And update you on the dashboard whether the financial health is good or bad, right? So that's how the credit risk is mitigated, by making sure there is right collateral and by monitoring it in a correct way, right? Third is a fraud risk, right? this is fraud done by NBFC promoter, right? For that, we do due diligence on the promoter background, etc, right? In this case, one of the promoter, Anshul, has worked with him previously. Right? So, but in any NBFC we onboard, we do like thorough diligence, background checks on the promoter, right? On their whole history of working and how are the corporate governance practices, etc, right? And to bring that additional comfort to mitigate this fraud risk, we also co-invest, right? Generally, we are the largest investor at the time of investing. We generally invest 2%, right, of the issue size and hold that till maturity, right? So that's how the fraud risk is mitigated. So there are 3 risks. This is how they are mitigated, like how I explained, but they are still non-zero, right? If you still have any doubt, feel free to ask questions. And if you want to understand, if you have any more questions, you can get in touch with our education team on our WhatsApp or on an email, right? And they will get on a call in, if required, even a Zoom call to make you understand the risk, help you understand the risk. Right? Can we go to the next slide? Yes, taxation. These are listed bonds. So as per tax, the taxation will be as per your tax slab, right? So and 10% TDS will be cut, right? And you can claim back TDS by filing if you don't fall under tax slab. If you fall under 20% tax slab, you'll have to pay 10% more, and this is 10% of the interest, right? Sorry, what is tax slab is of the interest you earn. Tax is applicable on that, right? So that's the taxation of bonds, right? Can we go to the next slide? Yes. Investment flow, right? So when the asset goes live, you can invest in market timings, that is 9:15 a.m. to about 3:30 p.m. on market days, right? So you can place the order by making payment on Wind. So you can either pay through UPI, RTGS, NEFT, or you can load the money in Wind with the wallet and pay from there, right? And once the investment is complete, the bond will be sent to your demat account, right? And it will take about 5 days, 5 working days, right? So if there are any holidays in between, it will get extended, right? And if you have any doubt regarding this, feel free to reach out to our team on our WhatsApp, and we'll get your doubt clarified. Can you go to the next slide? Yes. So thank you. Thank you, everyone. So as I mentioned, our WhatsApp is can you put up the last slide once? Yeah, our WhatsApp number is this. You don't need to remember this. On our website, or if you operate through app, there is a WhatsApp button. You click on that, it will take you through WhatsApp chat, and you can talk to our education team, right? And if you want any assistance on email, then you can write us on hello@windwell.com, right? Thank you. Now we have Parth Sangani here. Hi Parth, welcome here. Can you hear me?
Yeah, I can.
Yes. So I'll briefly introduce Parth first, and then we'll ask some questions to Parth that we have got, right? So Parth is a treasury head of Vivriti Capital. He comes with 15 years of experience in financial services. He was associated with different leading banks like Kotak Mahindra, ING, Vyasa, and has deal execution experience of over 15,000 crores, right? He's also member of Banking NBFC Finance Committee and Economic Policy and Government Representation Committee of Indian Merchants Chamber. Parth has completed an MBA in Finance from Institute of Chartered Financial Analysts of India, right? Thank you, Parth, for joining us. So Parth, so just to start, can you give us like what is the origin of Vivriti Capital? How has been journey? A very like brief context in 2-3 minutes.
So Vivriti was born to service the Indian mid-market space, right? And we wanted to do primarily 3 things to service this market. One is deployment of capital, the other was management of capital, and third was distribution of capital, right? And these are the NBFC, which is the holding company, deploys proprietary capital. The AMC manages capital, which is proprietary capital, and there is another subsidiary which distributes capital for the mid-market space. Now, this is a very large 25,000 plus companies with a potential size of 20 lakh crores, right? This is the market that we wanted to service, and this is and the Indian institutional segment has sort of been dragging its feet to service this, and that is where we have built our core competency, right? So the DNA of the institution of our group is to service the mid-market performing credit space.
Got it. And Vivriti does mainly enterprise or wholesale lending, as we call it, and then said there is some bit of retail lending, generally through co-lending, right? So, what is the key difference between directly doing retail lending and doing wholesale lending, and what are the different in the risk, right? Because this is a chunky portfolio you would have, right?
Correct. So the way to look at it is that our strategy, the core to our strategy is that we want to retailize corporate credit. And therefore, you will see that our top 5, 10, 15, 20 exposure as a percentage of the balance sheet has consistently come down, right? You compare this with any of the largest or the mid-market wholesale lenders in the country, we have the highest amount of diversification, right? Our average ticket sizes are anywhere between 10 to 15 crores in the enterprise space. Supply chain around 50 lakhs and 2 lakh rupees on the co-lending space, right? So diversification is the core to Vivriti strategy. Our single borrower is capped at 40 crores, and therefore this is by far the most granular corporate balance sheet that you will find in the country.
Got it. Got it. Why these borrowers actually borrow from NBFC like Vivriti instead of banks? Like, and how do you compete, and what is that whole dynamic? If you could throw some light on that.
So the space is typically serviced by banks. So my typical client is a client who has got a, let's say, 50 crore CC line. Hypothetically, a typical client is a client who has got a 50 crore CC line. Collateral has exhausted, right? And the bank is not willing to give him a longer term working capital, right? And this is a seasoned corporate with very good track record. So there are a few things that we don't do, which is hold co-funding, special situation, venture debt. So high yield business, which is risky, we don't do that business. We are lending to operating companies for the purpose of longer term working capital, which the banks are either unwilling to give or are not able to give on time, right? There are peaks and troughs in terms of demand in the working capital cycle, depending on the seasonality of the business, right? That is the service that we are providing to this segment. And our turnaround time is not even comparable to the larger financial institutions. We turn around door to door within 12 to 15 days, money out of the door, right? And there is, so one is a discipline which that is maintained at a underwriting level. So we put the money at the door, and then there is a very detailed due diligence which is done. The entire portfolio, every rupee of loan on the book is done and goes through a due diligence process every quarter. So every corporate is rated internally on the proprietary rating model every quarter, right? And a physical due diligence of 2 days at the head office. We meet the buyers, sellers, vendors, dealers, factory, suppliers, etc. This is all a part of the due diligence when we onboard a client. And thereafter, the entire portfolio goes through a rating process, which is an internal rating every quarter. So therefore, we know, and our entire balance sheet is monthly amortizing senior secured term loans, right? So we know that the proprietary underwriting model that we are using is working for us on every month, right? That is the differentiator. We do not give moratoriums to our clients, and therefore, it's not that we are only seeing interest. Every month we are seeing principal coming, right? So my model, internal model, is able to capture. So one piece of data point for you is, in the last 15 months, we do not have 1 rupee of new NPA, non-performing asset, right? This is what differentiates us from the market. We are agile, we move fast, we use technology, and therefore a typical client is a bank client, already bank client, right? But who's either not getting money on time or not on the terms that the client needs for his internal working capital requirement. That is what we are serving.
Got it. So there is one question from one audience member. If the banks are unwilling to lend and Vivriti is servicing them, isn't there a significant risk which Vivriti is taking, which banks are avoiding?
So banks are not avoiding. So typically, bank needs a hard collateral. Vivriti is willing to do cash flow lending. So from the very same bank, we take an NOC that this product line or a region or a geography or a segment of business, the cash flow will get escrowed into Vivriti account, right? Okay. So I am not junior to the bank. I am taking an NOC from the very same bank, right? So yeah, it is willingness to do meeting your client requirements, and that is what we charge a premium for.
Got it. Parth, now you have portfolio of about 5,000 crore. What are the expansion plans like, right? And how do you see it how do you see Vivriti shaping up in next 3-4 years?
So we'll have timely capital infusion as we have seen in the past, right? To support growth. We have above average growth plans, right? So we'll continue to grow at least double the pace that the market is growing, right? And we have the capability, and we have built the infrastructure and capability around it.
Got it. What is average rate at which Vivriti lends to borrower, or average yield of lending, basically?
So it depends on product to product. Plus, this is a risk-adjusted pricing, right? So if your profile is very good, right, you are rated A category, then you get priced differently. You're in a triple B rating category, get priced differently. Retail borrowers get priced differently. The tenor, the tenor, depending on the tenor, the supply chain is a 90-day funding product, right? So there the pricing will be different from a 3-year, 2-year term loan, right? So it's a very long range. So that the kind of products that we have on the balance sheet are very large. So putting a particular number to it is difficult. But at a balance sheet level, you can see from our audited numbers that we operate around 14.5%, 15%.
14.5%,
14.5%.
Got it. Okay. So thank you for Parth for coming in and answering those questions. Lovely to have you here. Thank you.
Most welcome. Thank you.
Yes. Now we will carry forward with our normal Q&A, right? So there are a bunch of questions on Luma link, so we'll cover them, and also some questions that have come here. So, okay. What is a good debt to equity ratio for NBFC? Is the discussed bond having good debt to equity ratio? Anshul, how do you look at it?
Sure. I'll give some context about how we should look at leverage. I mean, for NBFCs, the main business is lending out money to other borrowers. And when what they're lending out is essentially cash. Now, cash can come from either equity or debt. NBFCs, all the businesses, they try to optimize between how much equity they should put in the business and how much debt they should take in the business. Regulations allow NBFCs to take leverage up to from 6 to 6.5 times, which means if the business has 1 rupee equity, business can take 6 to 6.5 times debt. But at Vint, we think that amount of debt, even though regulations may allow, is too high. It poses too high a risk for bond investors. So as part of our internal policy, we typically don't onboard NBFCs where leverage is more than 4 times. That's our internal limit with respect to leverage. All the entities that we have brought on the platform till now have met this criteria. Vivriti, if we benchmark against the regulations and our criteria, Vivriti had a leverage of 3 times as on December 2022. And also during past 3 years, Vivriti's leverage has been broadly below 3x only. So compared to regulations where entity can take 6 times leverage, Vivriti's leverage is 3 times, which we think is pretty decent.
Right. In the event of bankruptcy, will Vint handle the recovery on behalf of investors who invested through the platform, or should each of us individually file claims?
Sure. It's a good question. So typically how the process works is if the NBFC goes bankrupt, the NBFC will be referred to IBC. IBC is Insolvency and Bankruptcy Code by the regulator. I'll be available with the regulator in this case. Under IBC, the process is broadly divided into 2 steps. In step 1, all the lenders come together to see if the entity can be revived. They can take steps like giving a moratorium, rescheduling the liabilities, etc. If all the lenders decide such a revival is not possible, then step 2 begins, which is the liquidation, in which whatever is the underlying collateral is liquidated in the market, and the money coming from sale of such collateral is used to repay back the lenders, the bondholders. Now, obviously, in a single bond, there might be hundreds and thousands of investors, which might be hundreds and thousands of investors which might be participating. So to represent the interest of these bondholders, a trustee is there. The trustee is appointed before the bond is issued, and these trustees are registered with SEBI. So it's not like anyone and everyone can become a trustee to a bond. Only SEBI registered trustees can be appointed as a debenture trustee for any NCD. So trustee acts on behalf of the investors. In case if trustee feels like trustee needs some guidance from the investors on what's the best course of action, trustee may reach out to investors and seek their opinion. They might conduct a poll, etc. And basis the majority decision, trustee will take the best course of action. So legally, it's the responsibility of the trustee to act to coordinate with the investors and act in their best interest. But obviously, since we are distributing the bond, we will be communicating how the bankruptcy proceedings are going on in a scenario where any of the entities have defaulted. Additionally, for all the bonds, we also invest our capital in the bonds. So we will be having a say in the bankruptcy proceedings as well. Like Ajinkya mentioned, for all the bonds that we bring on the platform, we have a skin in the game. Typically, we keep 2% of the bond size on our balance sheet and hold till maturity. So if the bankruptcy proceedings are going on, we will have a say on the table and we'll be communicating whatever proceedings are happening to our investors.
Got it. I'm a senior citizen, have been investing in Vintwealth bonds without any hassle, but find it difficult investing 1 lakh rupees bonds. Why it can't be less denominations?
Sure. I mean, we started with the 10K as the ticket size for investment in these bonds. But subsequently, SEBI has come out with the regulations which will regulate the entire ecosystem of bonds, of how bonds can be sold to different investors. Under the regulations, they have bifurcated bonds into 2 categories. One are privately placed listed bonds, which are the most frequently issued bonds in the Indian market. More than 98% of the bonds which are issued in the Indian market are fallen under this category, which means they are privately issued listed bonds. Now, under the regulations, SEBI has fixed the ticket size as 1 lakh for these kind of bonds. And since more than 98% of the market comprises of these kind of bonds, hence most of the bonds on Vint's platform also will have 1 lakh as the entry ticket size. Second category of bonds are publicly issued listed bonds, which fall under that balanced 2% market, which is there. We also bring publicly issued bonds on the platform, but since the issuance of these kind of bonds are like very limited and very rare, maybe only 1 or 2 bonds per quarter will be publicly issued, where the ticket size can be 10,000 as well. Hence, on the platform, most of the bonds have 1 lakh as the ticket size, and maybe 1 or 2 bonds per quarter have a 10,000 ticket size. Having said that, we are working on new structures where the ticket size can be 10,000 as well. Maybe over next 3 to 6 months, those new structures will be launched on the platform where the ticket size will be much lower compared to 1 lakh.
Got it. What happens in case of breach of any covenants? Who will monitor this, and will it be done by reputed audit firms? In case of covenants breach, will Vintwealth get the entity to repay immediately rather than waiting for maturity dates?
Sure. So on a quarterly basis, the covenants are monitored by trustee, by entity's auditor, and also by Vintwealth. In case there is a breach of the covenant, either investors can give a waiver if they think the breach is minor. If there is any major breach of the covenant, yes, the entity is obligated to repay back the money to the investors.
In fact, we had a case, right, where the covenant was breached and we got the investor, the entity like paid the investor early, about 6 months early, right?
Yes. So we did have one bond on the platform where there was a covenant breach, and entity repaid the money as soon as the breach happened.
Yeah, although that was a minor, it was not a major covenant breach, but we thought it is safe that investors are repaid. So that's what happened, and there was early payment for that.
Correct.
Can we file 15G, 15H to avoid TDS?
No, unfortunately, that is not possible as of now. There are some operational challenges around that. That's why for bonds, this for Form 15G and H is not working. We are working to find out solutions for this problem as well. But as of now, it's not possible.
Can Vivriti disclose the top 20 corporate borrowers?
That is private information. Unfortunately, it's not in public domain.
Got it. Path mentioned that they have internal ratings of the client. Do they rely on external rating? Is there a threshold?
Typically, wholesale lenders, they have their internal rating models, internal underwriting frameworks on which client to onboard, what kind of facility to give. Obviously, most of the wholesale lenders, they do look at external ratings as well, but they don't depend only on the view that external rating agencies are taking. They have their in-house credit team, in-house risk team, which does the underwriting of the client, and then only the client is onboarded on the balance sheet.
Is CARE A rating good enough for investment in this bond?
The answer will be like very subjective. I'll explain how the rating scale works, and then the investors can take a call depending on their own risk appetite. So the highest rating that a entity can get is AAA. AAA means that in the view of the rating agency, it's the best entity that can be there. For example, Government of India has AAA rating, and Government of India has 0% probability of default. So Government of India gets AAA rating. Next rating category is AA rating category. Next category is single A rating category. Next rating category is BBB. Then comes BB. Then comes single B. Then comes C, and then comes D. If an entity has a rating of D, it means it has either defaulted or is on the verge of default. So if I were to map these different rating categories on a scale of 1 to 10, with 10 being the highest, AAA will be 10, 9, AA will be let's say around 9, and single A will be let's say around 7 or 8. So on a scale of 0 to 10, Vivriti's rating, basis category mapping, will be around let's say 7 or 8.
Got it. Not directly related to this asset, but are we still planning to have an app in App Store? Yes, the app development is under progress. It should be there in a couple of months, right? Because we are getting regulated, there are a lot of compliance related integrations that are happening. It is sort of little delayed, but now the work has started, and we should have the app, iOS app in couple of months. Is Vivriti bond a pari passu type bond?
The underlying security is exclusive in nature, and the investors have first right.
Yeah, so it's not pari passu, right?
It's not pari passu.
Why is collateral size only 1.05x? Previous bond issues had collateral of 1.15x or even higher. How is the riskiness of asset affected due to this?
Sure. It's in line with other NCDs that Vivriti has issued. For all the listed NCDs, Vivriti has given 1.05x as the collateral only. If we compare this in terms of how risky or how safe the bond is, historically, the NPA numbers of Vivriti have been below 1%. In fact, for most of the years, they have been below 0.5%. So even if the NPA numbers were to become 4 times, 5 times, even 10 times, still 1.05x will be adequate. Secondly, the entities that Vivriti is lending to, these are in turn enterprises, can be small and medium NBFCs as well. And Vivriti is also taking security from their end borrowers. So if we look at the net cushion which is there, we feel that's it's adequate.
Of late, the IRR of products are in the range of 8.5% to 10%. But in past, there were products more than 10%, that is around 11-12%. With interest rate increasing, why are the recent products less than 10% IRR? Actually, last month only we had many products in the range of 11.5%, right? But it could be good to explain why are there products with low IRRs?
Sure. I mean, we don't aim to bring like all the products which have high IRRs. For most of the bonds, when the interest rates were lower, the range used to be 9 to 11%. Now we understand that rates have risen, and an entity which was borrowing at 9%, let's say last year, is now borrowing at 9.5, 9.75, or up to 10% this year. Hence, most of the bonds this year have been in the range of, let's say, 10% to 11.5%. And this will be the range for most of the bonds. We did have one bond which was at 8.6, which is Muthoot bond, which is live. Now, Muthoot is an outlier. I mean, it's a very large NBFC having AA plus rating, which is just one notch below AAA rating. The bond tenure is also 8 to 10 months, and the balance sheet comprises of gold loans. So for Muthoot, the cost of borrowing in the market is pretty low, because market thinks the risk of Muthoot going down is almost zero. Hence, Muthoot, I think, is the outlier. But most of the bonds that we are bringing on the platform are in the range of 10 to 11.5%. In fact, last month, like Ajinkya mentioned, there were two bonds offering 11% or higher. I think for at least for the coming quarter, most of the bonds again will be in the range of 10 to 11% only. And that's in line with our underwriting also. We don't chase too much yield, because there are like enough entities in the market which are borrowing at 13, 14, 15%. But not all are credit worthy to be brought on the platform. So we don't want to compromise on the risk underwriting just to chase on the yield.
Got it. I've been an investor through Wintwealth for some time, and I love the platform and service levels. Will Wintwealth give opportunity for us to invest in equity of equity of Wintwealth? Yes, I mean, we are not raising right now, but whenever the round happens or whenever anything such is available, we'll be more than happy to. Please just ping us on our education team, and we'll keep a note of it. And whenever there is something, some such opportunity available, we'll reach back. Do increasing repo rate by RBI due to Fed rate hike, can it affect the bonds where we have invested from Wintwealth previously?
Unlikely. I mean, because the repo rates are increasing, the rates at which NBFCs and borrowers have borrowed have also increased. So their EMIs have definitely gone up. So NPA numbers for all the NBFCs will increase, but it will be marginal impact. We don't expect NPA numbers to increase so dramatically because of rate hikes that there will be too much stress on the balance sheet of the entity. And at Vint, we bring only those bonds where the tenors are on the lower side, and that too amortizing in nature. So as the rate hike is happening, most of the bonds are getting repaid. So as on date, we don't see any stress on any of the bond which is live on the platform. And we don't foresee any defaults, etc. definitely to be there, any of the bonds that we have underwritten.
Got it. I just joined and missed the webinar. Can I please get the recording immediately after this session? Would appreciate if it can be done today. So this will be uploaded on YouTube probably tomorrow. But if you need it today, we'll make it available. But please share your mobile number here so we can WhatsApp you. Because I can only see the name PM, but I don't, like, if we have to share, we don't know how to give the link to you. We'll probably share a drive link today, right? But we will be very happy to. And anyway, it will be available on YouTube by tomorrow. So please share your mobile number in comments or reach out to our education team. We will share that video. So there is 10% TDS on interest plus taxation as per one's income slab. Does this not make overall return from investment much lesser? So TDS will be adjusted in your taxation, right? So let's say if you are in 20% tax bracket. So if you're paying 10% TDS, additionally, you only have to pay another 10%. If you're in 30%, you have to additionally pay only 20%. So it's not like you will pay 10% TDS first and again 30%. The total tax is as per your slab, right? And that has been the case for bonds forever. In fact, debt funds had this benefit of indexation after 3 years. That is also gone. And now bonds and debt mutual funds are at parity in terms of taxation. Can HUF create account with Wintwealth? Yes, there are HUF accounts already on Wintwealth. People invest through HUF accounts. So you would first need a demat account of HUF with any broker, right? And then you can create it on Wintwealth. Can you advise what is the advantage or disadvantage of bonds and debt funds? Debt mutual funds.
I think it's a good question and very relevant question, especially considering that taxation arbitrage in favor of debt funds has been removed yesterday. So if you invest in a debt fund, essentially you are outsourcing your investment management to the debt fund manager. And what the debt fund manager will do is in turn use the money which you and other investors in the debt mutual fund have given to him or her. The manager in turn will deploy money into, let's say, 10, 15, 20 bonds that the manager likes. In India, most of the debt mutual funds are very risk averse. Hence, bulk of the deployment ends up happening in government securities or entities which are rated, let's say, in AA category or AAA rating category. The result of which is the yield that debt mutual funds are able to give to the investors is in the range of, let's say, around 7 to 7.5%. So most of the YTMs or yield that debt mutual fund portfolios are carrying presently are in the range of 7.25 to 7.5%. The good thing is it's deployed mostly in AAA rated assets and the money is well diversified. But the flip side is the returns that debt mutual funds are giving are not even beating the FD returns. So an investor, at least in my opinion, may be better off investing in a FD where pre-tax returns are same or slightly higher. There is government guarantee up to 5 lakh. So there is no risk as well. And the liquidity is also there. I mean, you can go to a bank and withdraw your FD at any point of time. On the other hand, debt mutual fund will have volatility as well, which means whatever 7.25 or 7.5% returns are there, these are not fixed. These are market dependent. If tomorrow the yields in the market increase substantially, there will be mark-to-market losses, and you may not even get that 7.25 to 7.5%. So that's the positives and negatives of debt mutual fund. Before they had this taxation arbitrage, because of which the taxation was much lower, and hence they were still very attractive. But now with the tax advantage that has been removed from the debt mutual funds, I don't think there is too much value in terms of investing in a debt mutual fund. One may be rather better off investing in a bank FD, where you're getting 7.5 to 8 or 8.25 kind of returns. Coming to bonds, the good thing is the returns are higher, but the flip side is there is less diversification. The diversification needs to be done at an investor's level, which means if you want to diversify, you will need to invest money into, let's say, 5 or 10 different bonds. Then only you will get the proper diversification. The taxation is now at par for FDs, for debt mutual fund, and for bonds. So there is no difference in terms of taxation as such. But from a risk return point of view, the bonds will be giving you higher risk, but the will be giving you higher returns, but the risk will be higher, and you'll need to mitigate the risk by diversifying into multiple bonds.
Got it. Has this entity ever defaulted or delayed payments in the past to either bondholders or to the banks?
No, no delays, no defaults, and no rating downgrade as well. By rating downgrade, I mean if there is a stress in the entity's balance sheet, the rating agencies will reduce the rating that they have assigned to the entity. In Vivriti's case, there hasn't been any delay, there hasn't been any default, there hasn't been any rating downgrade as well. In fact, the rating has been increased by 1 notch almost a year back.
Okay. Can you allow NRIs to use Vint12 platform?
We would love to have NRIs on board on the platform, but unfortunately, the FEMA regulations, which are given by RBI, don't allow NRIs to invest in these kind of bonds. There is only a very, very limited set of bonds, which are infra bonds, where NRIs can invest. But normal senior secured bonds, normal corporate bonds, FEMA regulations don't allow NRIs to invest. So that's why like our hands are tied with respect to this issue.
Got it. What is advantage of investing from Vint12 compared to investing directly in bond? Or is it just the structuring benefit we get from Vint12?
One thing is most of the bonds that we are bringing on the platform, these are exclusive bonds, which have been curated by our assets team, by our risk team. We do our in-depth research on the entity in terms of systems, operations, financials, do that curation. So Wintwealth is not an open platform, which means we don't bring any and every bond on the platform. We bring only those bonds where we have comfort, we have done our underwriting. And most of these bonds are exclusive in nature, which means this particular bond you will find only on Wintwealth. There may be some non-exclusive bonds as well, but bulk of the bonds are exclusive in nature. Secondly, we share with our investors communication with respect to quarterly analysis, key updates on the entity, etc. We help investors with respect to liquidity, though there is no guarantee, but on a best effort basis. In case if anyone wants to redeem the bond before maturity, we see if there are other investors on the platform who are willing to buy that bond from the investor who wants to sell the bond. And now we have 42,000 investors on the platform. So that the chances of finding a willing buyer is higher, because on a best effort basis, we are trying to provide liquidity to the seller by finding a willing buyer from those 42,000 odd investors which are there. But I mean, in case if you like find, if the same bond you are able to find somewhere else, other than the 3-4 advantages that I have mentioned, the risk return remains the same.
Got it. Okay. Generally, by the time we get to invest in bonds with 10% or more interest on the Wintwealth platform, it is already sold most of the time. Is it planned that way? It is definitely not planned. So the thing is, we only take exposure that our risk team is comfortable with, right? So we only, so just because some bond is paying 11%, we can't bring 100 crore issue of that, right? So whatever as our risk team is comfortable, we'll only bring that as on a platform. As Anshul mentioned, right, this is a curated platform. This is not an open marketplace where you'll find any bond that is available in the market there listed on the platform, right? So therefore, there is always supply crunch, right? And therefore it gets over, unfortunately. We're solving for that, and slowly we'll solve that, is what we believe. Exclusive in nature means it is direct secure, which we don't get through direct investment. Yes, in a sense, if it is exclusive bond, you will not find that on any other platform or your broker platform. So yes, so you can say that you wouldn't get that by direct. When will the bond be placed on in the platform? What is the go live date?
It's going live on Tuesday.
Tuesday. Got it. How does Wintwealth earn by listing these bonds? Anshul, you want to answer?
So we can earn via 2 channels. One is entity can pay us a fee for structuring the bond. Second is we can make revenue by via a spread. Let's say the bond was issued at 11% and we sell it down at 10%, so that 1% is our spread. In this case, there is no spread income. We have only charged a fee to the entity, and that's our only revenue.
Got it. Can we know the issue size and how much it is allocated to be sold through Wintwealth platform?
Out of which 20 CR we are bringing on the platform on Tuesday.
Got it. Why there is limit in purchase of certain bonds? So that it should, I'll answer this question. We want to make it available for more investors. Sometimes some bonds are very attractive, so they get sold out between very less number of investors. So for this bond, like we have kept a limit of 50 lakh because we don't want anybody coming in and subscribing to the whole issue, right? So it is in the interest of investors that we want to make sure more and more investors get access to this.
I'll just add to this. So there are the limits can be on 2 kinds of bond. One is 1 lakh ticket size bond, for which the limit is 50 lakhs, because that 50 lakh limit is also there because Wintwealth wants to serve individuals. We don't want to have institutions as investors on the platform. So we don't want a single institution to come and buy the entire 20 crore bond of Vivriti. That's not like why Wintwealth was established. We want to like cater to individual investors. Second kind of limit is of 1 lakh, which can be on bonds which have a ticket size of 10,000. These are publicly issued bonds. Now, like I said earlier in the webinar, the frequency of these bonds is like very limited. So we want people who can only afford 10,000, 20,000, 30,000 to invest in a single bond. They should also have access and opportunity to invest in these kinds of bonds. So only for 10,000 ticket size bond, there is a limit of 1 lakh. For all other kinds of bond, there is a limit of 50 lakh, which is coming because we don't want institutions to come and buy the entire bond.
Got it. By exclusive, do we mean that we won't be able to sell it on exchange?
No, the bond is definitely listed on the exchange. So it's exclusive in terms of purchasing. You can only purchase on Wintwealth, but if you want to sell, you can punch in a sell order on the exchange. If there is a buyer on the exchange, the trade will get executed, but it's slightly unlikely that you'll find a buyer on the exchange. You can reach out to our education team on the WhatsApp, and they can try to find a willing buyer for that bond.
Do we need to add funds to Vint wallet for investing in this asset? Yes, like there are different ways, but adding adding funds to Vint wallet is definitely one way. You can pay through RTGS, NEFT, or UPI also. However you have been investing, right? If you have any questions related to payment, especially if you are buying for the first time, just reach out to us on our WhatsApp, and we will assist you with the exact payment method that will be beneficial to you. Wintwealth can come up with corporate bank bonds. Anshul, you want to answer? Can banks even issue bonds?
They can issue only certain kinds of bonds. Most of the bonds that banks issue, they are either subordinate bonds or perpetual bonds. We think both these category of bonds are very, very risky. We have already seen in case of Yes Bank, the perpetual bonds were written off, even though equity investors received their money, but perpetual bond investors did not get even a single rupee. And as recent as last week, Credit Suisse's perpetual bonds were also written off, like outside India, but the profile of risk remained the same. So we don't think subordinate bonds and perpetual bonds is something that retail investors should be participating in. And bonds and banks cannot issue like normal senior secured bonds. So that's why you don't see any bonds issued by banks on Wint's platform.
Got it. Why are the number of bonds on Wintwealth platform is very less? Anshul, you want to answer this?
Yeah, I mean, like we discussed, Wintwealth is a curated platform. So for any bond that we are bringing on the platform, we need to do our own underwriting, our own due diligence, analyze the entity's financial health, systems, operations, do market reference check, etc. That process takes time. Typically, to underwrite any bond, we need 15 to 30 days to do our analysis. The frequency of bonds on the platform has definitely increased over past 6 months. Earlier, we used to bring only one bond per month. Then it became 2 bonds. And last month, we had 3 different bonds, which we brought on the platform. So we think typically 3 to 4 new bonds will come on the platform every month. And gradually, as the capacity of the platform, as the capacity of the team increases, this may even become 6 to 8 issuances per month over time.
Got it. Does Wintwealth underwrite apart from 2% in case it is undersubscribed? We don't underwrite directly, but we have warehousing partners. So people who subscribe, and they carry that risk. So we don't underwrite. We are a platform, but there is someone who is taking that risk in primary of subscribing that. And maybe if the bond doesn't get sold out, they carry that inventory and they hold till maturity. What is the upper limit for this asset? It is 50 lakh. Overall, do you suggest investing in this bond is risk-free and hence good? Anshul, you want to answer this?
Yeah. See, these are not risk-free bonds. So that thing I want to state like very clearly, that don't see them as alternate for FDs. FD investment up to 5 lakh is guaranteed by RBI subsidiary, and that is risk-free. Second risk-free instrument is investing directly in Government of India's bonds. Any other instrument other than these two are risky in nature. So don't park your emergency funds in these bonds. Don't treat them as alternate for FDs. These are issued by private entities. The entities have been underwritten, which means we have done our analysis, but even our analysis can be wrong. There is a remote possibility that any entity on the platform can default. The analysis has been done. The structuring of deal is done in such a manner that risks are mitigated, but residual risks are non-zero. So treat them as non-risk-free bonds only, and don't park your emergency funds, and don't see them as alternate for bank FDs, which are insured up to 5 lakh.
Got it. Now, the next question is, considering the borrowing cost have gone up by 2.5% in the past 1 year, shouldn't the similar risk bonds on the platform come with returns in the range of 11.5% to 13.5% instead of earlier 9 to 11%?
It's a good question. Two things I just wanted to highlight here. One is the rates haven't trickled down to the end borrower, which means NBFC's borrowing costs have increased, but they haven't increased to 50 basis points. The increase which we are seeing is in the range of 75 to, let's say, 150 basis point for most of the entities. Second is Vivriti, for example, we have brought this at 10%. Had we brought this at had we brought to Vivriti last year, the borrowing cost, the pricing to the investor may have been in the range of 9 to 9.25. So Vivriti is giving 10% because its borrowing rates have increased. Hence, they are able to give 10% in today's market. Last year, it may have given only, let's say, 9.25. At an overall level, yes, there will be some bonds which may cross 11% as well. For example, iFinance is a good example. It's a A- rated entity, and it was giving 11% to the investors. There was one more entity which gave even more than 11% to the investors. So as the rates trickle down to the end borrowers, the pricing that NBFCs can offer to the investors will increase. But broadly, the yield that will be available on the platform will be in the range of 10 to at max 11.5%.
Got it. Recently, BPCL and some other PSU issued bonds, but the ticket sizes were very high. Any chances bond like this come to win 12th in future with a reduced ticket size of secondary sale?
So ticket size cannot be reduced in secondary market. If a bond is issued at a certain face value, even in secondary market, the face value will remain the same. I'll check for this particular issuance. What was the face value? Few entities, what they do is, let's say the bond may have had a face value of 1 lakh, but they'll say if you want to subscribe in primary, buy at least 100 units, which means investors need to invest at least 1 crore rupees to participate in the primary. For those scenarios, yes, in secondary, the ticket size will become 1 lakh, even though it was 1 CR in primary. But the face value of the bond cannot be reduced in secondary market. To answer the second question, will we be bringing bonds of PSU entities on the platform? Yes, that's a discussion we are having internally. And maybe we'll finalize this month. And over next, if we do take the call to bring bonds of these PSUs as well on the platform, maybe over next 2-3 months, you will see the same.
In this entity, the debt to equity ratio is increasing. What is CRAR? How it impacts business? Is the lower CRR better or higher the better?
Low leverage translates to higher CRR. So low leverage is good and high CRAR is good. CRAR is computed. This is how much equity capital is there in the business. The calculation is slightly technical, so I won't go into the nitty-gritties. But yes, low leverage translates to high CRAR. Regulations allow NBFCs to operate at a CRAR of minimum 15%. Compared to that, Vivriti CRAR is quite moderate. It's not like very high as well, but it's definitely not low. A 3x leverage is pretty decent for any NBFC. The leverage increases over time because as the business grows, the leverage will increase. But then entity raises new equity and the leverage comes down. So even in case of Vivriti, we have seen this cycle wherein leverage was, I think, one time 1x in March 2020. It increased slightly. Then entity raised a fresh round of equity. It came down. Now it has again increased, but entity plans to maintain a leverage of not more than 3.5 times in near future.
Got it. When some banks are giving about 9% interest rate on FDs, how do you risk compare with potential rewards?
It's a valid point. I mean, because the rates have increased and some of the small banks, especially like some of the very small new banks, they are scrambling for deposits, and hence the yields that they are giving has definitely increased. The bank size is small, but the good thing is there is insurance up to 5 lakh. So the risk is quite decent. It's a good arbitrage which is there in the market. One should capture the arbitrage, but one should definitely diversify. I think other than one bank, which is giving 9% yield, most of the other banks, at least for the general citizens, are giving rates in the range of 8 to 8.5%. In case if you are planning to park in that 9% bank, I'll suggest not to go overboard. Keep your allocation below the 5 lakh insurance limit, which is there. Anything above than that, diversify across multiple banks in case if you are allocating money to these smaller bank FDs. For other banks which are there, which are offering 8 to 8.5% return, in this bond, investor is getting a delta of roughly 200 basis point. The tenor here is on the lower side compared to the tenors that other banks are giving, and the bond is also amortizing nature and is giving regular cash flow. So I think the delta of 150 to 200 basis point is commensurate with the incremental risk that investor is taking.
Got it. Can we add funds to Win12 wallet from any bank account? No, you can only add from your KYC verified bank account. Otherwise, the funds will not be transferred. It will get returned. Sanshit, there is one more question is like, has any bonds on the platform ever defaulted? The answer is no, right? I have query regarding the new amendment of taxing capital gains on debt funds. What implication does it hold for capital gains on listed or unlisted bonds that are held for more than 2 years? So there is no implication on bonds as such. The taxation on bonds hasn't changed. Earlier, there was no TDS. From the budget session, they put 10% TDS, but other than that, there is no tax change as such. Right? In many corporates, we notice that they borrow funds and divert the funds directly and indirectly to promoter private companies or shell companies. This results in default. Does Win12 have a mechanism to monitor this, prevent this kind of practices? Do you check the related party transaction of these entities?
Yes, we do check the related party transactions, and wherever the corporate structure is like too wide, we have avoided onboarding those kind of entities as well. For example, if a promoter has, let's say, a presence in energy sector, telecom sector, banking sector, and has an NBFC, those kind of entities we have intentionally avoided, because in those kind of entities, the risk of this scenario playing out is definitely on the higher side. For other entities also, yes, we do have a risk team which tries and checks that there is no such kind of malified related party transaction which is taking place.
Is Win12 planning to come up with invoice bill discounting deals in future? We are hoping that it gets regulated, and then we will definitely get it. We are just figuring out. So we thought about it, frankly, but we don't see a point of bringing unregulated products, right? These are very risky in nature for investors because there are a lot of tail risks, right? And so we will generally stay away from unregulated product as such. In future, we'll see if our view changes. Can we buy SGB using Wind platform with our regular Demat account rather than Zerodha? Yes, you can copy the script code and then buy it on your own broker. With Zerodha, we have a API integration, live integration, tech integration, but on other brokers also you can directly buy. What is the average loan tenure in this issue? Underlying loans ka tenure.
The average tenure is roughly 18 months.
Got it. What is the equity structure of Windwealth? This is a question of Ravi. I didn't understand the equity. What do you mean by the equity structure? Anshul, what?
I think the question is who are the equity investors? We have 5 co-founders which are there who hold a stake in the company. Additionally, we have a few VC firms which are holding stake in the company. And Zerodha, through its Rainmatter fund, is also an equity investor in the company.
So we have Zerodha, we have 314 Capital, we have Arkham Ventures, we have 8 Road Ventures, we have Bloom Ventures, we have Better Capital, and then there are a bunch of angels, about 60, 70 angels. During the last 2 sessions, while applying through your platform at 9:15, I got error message saying, please try after 5-10 minutes. After 10-minute issue got fully sold. Is there any issue with your servers at peak time? So I apologize for this experience. We have seen this once. I'm not sure about 2 occasions. Once we had this issue and then we got it solved, and we haven't faced it after, right? This could be some minor error, right? But if you could get in touch, we'll see if we can do something, and we'll make sure that it doesn't happen, or whether it is a problem at your end, right? But once it had happened, and we again apologize for that, right? And we have made sure that it doesn't happen again. What are the possible ways to buy bonds listed on the platform but have already been sold out, right? Should we go to exchange? Generally, if you go to exchange, you will hardly find them on that day, right? You can just join the waitlist. There are waitlist join options, right? Or you can reach out if you are interested in particular bond. You reach out, like when you reach out to our education team, we make a note of it whenever somebody wants to sell. But generally, we go by the waitlist number, right? So there are, for most of the one, there is waitlist of 500 plus, right? Especially 10,000 tickets, right? So it is hard to get into waitlist now and then get that bond.
In terms of buying on the exchange, in case if you're trying to do that, just ensure that the price at which you're trying to buy matches the yield. We've had 1 or 2 rare cases wherein there was some seller on the exchange. Let's say the bond price was at 1 lakh rupee. Someone put in a sell order at 1,05,000, and the buyer had put in a market order. So the buyer got the bond at 1,05,000, even though the fair value of the bond, this is the calculated YTM, was only 1 lakh. So in case if you're trying to buy on the exchange, just ensure that you are calculating the price. This is the desired YTM, and then punching in a limit order only. But like Ajinkya mentioned, the chances of finding the bond on the exchange will be very, very remote.
So we are at the end of questions. Thank you everybody for joining in. We'll be here a couple of more minutes, just in case anybody has any questions. For SGB, Zerodha the only partner, or we can use other demat accounts like Abstracts and Fires. So you can use any broker, right? With Zerodha, we have an integration. That's the only thing, right? So you can just copy that series code, like script code, right? And how you buy any other equity, you can buy SGB in your broker account. So you have to copy that and paste that in your broker account and then buy it, right? So it's not that you can only buy through Zerodha. We will facilitate integration with more brokers in future, but you can buy through any broker, Upstock, Fire, any broker. Right? How do you, as a business, accommodate regulatory and taxation headwinds and sudden changes? For example, what happened with MLDs? I understand many of the changes are good for retail investor, but at sometimes it seems as an overreach. So that's a very nice question. So look, when we started, I mean, we knew that this field is unregulated, right? And there will be regulation as we grow, right? So we kind of get a sense of how regulation is moving, what is the spirit of regulation, right? Obviously, not every time we are able to predict, but many times we get a sense of how the regulation is going to grow, right? And for that, we have raised equity and we have long runway, right? And that's what helps. And we quickly readjust. I mean, what we also clearly believe that this regulation is great for this industry to stabilize and grow, right? If this regulation doesn't come, we can't grow, or the bond market cannot grow, the retail investors cannot grow, right? And if there is, without regulation, there is some mishap, the regulator might overreact in future. So it's better that there is regulation now, right? So we are very happy that regulation is happening. And as with any new regulation, there will be teething problems, and we are well prepared for that as a business. Madam. We miss 1 or 2 months here and there, but we get back on track. Thank you, Anshul and Ajinkya. You did a great job in this Q&A. I like your transparency and clarity. I would like to become angel investor of Winter. Thank you, Shankarji. I give you AA rating, Anshul and Ajinkya. So that's nice. Thank you. Are there any plan to bring bond other than NBFC? Anshul?
Not in the near future, or maybe 3 to 6 months down the line, we may bring non-NBFC bonds as well.
Why the minimum ticket size of privately issued listed bond is set to 1 lakh rupees by RBI? Actually, it is by SEBI. Is there any hope that ticket size will get reduced to 10,000 again?
Yes, there is hope. In fact, SEBI, when SEBI was proposing this set of regulation, they proposed a 10,000 ticket size only to their board, but we don't know how the board discussions went. Subsequently, in a press conference, SEBI's chairwoman also mentioned that for now they are keeping it 1 lakh, but she also mentioned that over time this will be definitely brought down. Whether this will be brought down to 50,000 or 10,000 is something we'll come to know in due course of time. But yes, the intention of the regulator is definitely there, that it's a new space. Hence, they are starting with a slightly higher threshold. But as the space grows, evolves, they get the confidence. They have communicated, and our sense is also there, that the ticket size will come down gradually over time.
Got it. Nihal says great informative session. Thank you, Nihal. So yes, we are here for a couple of more minutes. If you have any questions, we are happy to answer. Right. So asset goes live on Tuesday morning, 9:15 a.m. Great. I think we are at the end of the question, so we'll wrap it up. Good night, everyone. Have a great weekend. Thank you.